Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Jason Reynolds, and today is the 7th of August of 2023. Today we will discuss a variety of topics, starting with the week's earnings reports, U.S. economic indicators, and we'll delve deeper into the performance of Berkshire Hathaway, the conglomerate led by none other than Warren Buffett. So let's get started. This coming week, we're expecting earnings reports from a number of corporations, including Eli Lilly, UPS, the Walt Disney Company, Honda Motor Company, and Alibaba. These reports give investors a glimpse into how these companies are performing and can significantly influence stock prices. Keep an eye out on these. Turning to the U.S. economy, the Labor Department will release its latest inflation readings, with the Consumer Price Index, or CPI, on Thursday, and the Producer Price Index, or PPI, on Friday. Inflation measures the rate at which the general level of prices for goods and services is rising and is a key indicator of the health of an economy. The anticipated rate for consumer prices is a rise of 0.2% last month, matching June's rate, and an annual increase of 3.3%, which is a slight acceleration from June's 3% rate. Now, moving on to more macroeconomic indicators, the New York Fed will issue its quarterly household debt and credit report this Wednesday. This report gives us insights into the financial health of U.S. households, which, in turn, can impact spending patterns and economic growth. A couple of other economic indicators to watch this week include the University of Michigan's Consumer Sentiment Index and a GDP reading from the UK. With a strong jobs market and easing inflation, consumer confidence has been on an uptrend lately, but it's still below pre-pandemic levels, so there is room for improvement. Shifting gears a bit, let's take a deep dive into the recent performance of Berkshire Hathaway, Warren Buffett's conglomerate. The company reported a rebound in profits in the second quarter to $35.9 billion, driven by strong results in its core insurance businesses, notably Geico, and a surge in the value of its stock portfolio, currently valued at $353 billion. Berkshire's operating earnings, which Buffett himself recommends focusing on for a clear picture of the conglomerate's performance, grew 6.6% to $10.043 billion. This surpasses analysts' expectations and offers a solid picture of the conglomerate's health. In terms of investments, Berkshire has been selling off stocks in the past 2 quarters, but made significant unrealized gains of nearly $26 billion in Q2, largely from its holdings in Apple. It's worth noting that Apple alone accounts for nearly half of Berkshire's equity portfolio, despite a recent tumble amid a market retreat and its own lackluster earnings. Apple stock has seen a strong performance overall, up 40.1% year-to-date. On the other side of the coin, the company's BNSF Railroad saw a 24% decline in profit. Even successful companies have their ups and downs, and it's important to consider these when thinking about the overall performance. Berkshire has also been investing heavily in energy, especially in Occidental Petroleum, and is set to increase its stake in a Maryland liquefied natural gas export project to 75%. Following a deal with Dominion Energy. This points to a strategic focus on energy, which will be interesting to watch in the coming quarters. Despite all this activity, Berkshire's cash pile has grown to $147.4 billion from the first quarter's $130.6 billion. Buffett's company remains cash-rich, providing it with significant financial flexibility. Wrapping up with Berkshire's stock, there was a slight drop of 1.1% last Friday, but over the past 4 weeks, we've seen an upward trend, marking the 4th consecutive week of gains. That's all for today's update. Remember, the world of finance never sleeps, and staying informed is crucial to making savvy decisions. Make sure to stay tuned for our next podcast, where we'll continue to bring you the essential financial news in a digestible format. Until then, this is your host, signing off.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.